All right, what's up, everybody? Welcome back. Hope everyone's having a good weekend, and hope everyone has a good Easter if you do celebrate that. For this stream, as always, we're gonna go ahead and take a look at Bitcoin. We're gonna briefly touch on the medium-term time frame, and then focus more on the lower-term time frame. So, without further ado, let's go ahead and jump right into it. So on the medium-term time frame, we've got a roadmap that we've been following here. And it all really stems from building the base from this correction right here. And it all stems on observing if this is a 1 or A pivot, and a 2 or B pivot, and then a 3 or C pivot, moderately. From an extreme stance, we could be in another wave 1, which is a very bullish perspective. But moderately, we're looking at this as a 3 or C, leaning more towards a 3. Now, essentially, we're still looking at being a correction. The guideline right now, first, as a base, is the length of this correction. We want some similarity in time if this is a wave 3 and a wave 4 of the minor degree. And this is something that we've been following. These levels right here, this 236 and 272, and the 3414 and the 382, have been extremely important support levels for the bullish macro counts. So these are levels that we've been expecting, monitoring, and we're aware that we want to see extreme support off of these levels. Now, once again, this first level was expected. And we talked about this. We said after this is where things become difficult. The reason why is because of everything that can come after this. Essentially, a 3-wave move is expected immediately for a correction, no matter what. Right to the 236, 272. These are pretty much always givens. It's always a given that you're mostly going to get a 3-wave correction right to the 236 and 272. That's pretty much always a guarantee. Afterwards is where it becomes difficult in managing expectations. I kind of touched on this in the Discord. Somebody asked me the reason why I believed it was going to become difficult after we got this correction. And we basically listed all the reasons out. Now, observing it from a chart perspective, it's because of how many different pivots can be created off of this single 3-wave move. There's a multitude of pivots that could occur, basically. That's why the move after this becomes difficult in managing expectations. Although we knew that that move was coming. And once again, we understood there was a 3-wave move down, and then minimum another 3-wave move back up. It's just about managing how high it's going to go, and if this is an internal pullback, or if this is going to be a pivot externally. So as of right now, nothing's really changed from a time perspective. We still believe this correction to continue to correct for at least until the end of April. That's the guideline. From a price perspective, there's many different paths that price can take now because of us completing that 3-wave correction and building off of that, which I'll discuss the variations here very shortly. Zooming in just a little bit closer and basically observing it from the pivot tier to the pivot tier, this has been our perspective. It's pretty much the same, it's just a more scrutinized version. So we were looking for, once again, this minimal pullback zone, this area. The next zone that we were monitoring was the 3414, 382, coupled with the 2 to 2.5 standard deviation. This is something that I'm not expecting, although this is something that we have to be aware of, is these equal lows right here, coupled with the 4 to 4.5 standard deviation, along with a golden fib. This is just an area where we could see it being attacked. It's just not something that I see is likely, but it is a significant area that we have to be aware of. We really haven't monitored or been attacking this wick. That's been our goal. Whether we correct up and come back down for it, or we have these highs as still protected and just come right back down for it, is a discussion up for debate. After more price action has occurred, and after us completing this 3A move, the possibilities of attacking this high have now opened up. Before we completed that, we noticed that these highs were protected, but after completing that 3-wave move to this 236, 272, now the possibilities of attacking this high open up greatly. Once again, it's all about managing expectations. For right now, the greatest observation that we have to observe is going to be structure and price. What I mean by that is there's a lot of different variations here that we can observe. So the first variation that I can observe would basically be a 1-2-1-2 scenario. Meaning that this 3-wave correction, this A, B, C, was it. That was it. That was the wave 2 for our super bullish counts. And now we're impulsing up for new highs. This is something that we were aware of, but not something that we were expecting. This is for the extreme case, the extreme bullish case, the 1-2-1-2 scenario on the higher time frame. From a structure perspective, everything's going well for it. It's got a sharp correction, followed by a shallow correction, where it's going to complete a 5-wave move. A 1, 2, 3, 4, 5. The wave 1 extreme is protected. Price does not go into this price territory. We had an extremely strong pivot off of the low for a wave 1. The only thing left is just a break of structure for a wave 5. That's the only thing that's left. Timing wise, the impulse is starting right here. And I'm observing this to be a minuet impulse. So for a minuet degree, minimally, we want to see it hit at least 3 days. We're well beyond that. For the lesser average, we want to see it be about 4 days to 7 days. We're well beyond that as well. Now we're getting into the extreme territory zone, where once price goes beyond this maximum expectation for a minuet degree, we may have to look at this and upgrading it to a minute degree. Or it just means that once it reaches territory, it's about to experience a strong pullback. So we do want to see some sort of weakness forming in the middle of the week here, around Wednesday, Tuesday, or even Thursday. Potentially could go to Thursday. But as of right now, we do have a nice AMD setup forming for it as well. Nice range that's developing. Nice external range, or nice range between these this high and this low. Then we wait for price to engage it. And then we look for that distribution for the A. So there's a good narrative here following it. Everything going well for this. On top of that, instead of this being an impulse for a 1, it could be an impulse for an A. Now, this actually was the only pattern that I was really not expecting. I was not expecting any type of expanded flat. Basically, because the prior correction was an expanded flat. Right here. And before that, this correction was a flat. A, B, C. So it could build a nice narrative on the 1-2, 1-2 scenario. When you see 1-2, 1-2s, 1-2s, these two corrections are usually the same as the prior correction. Meaning if this was a sharp zigzag, this one's going to be a sharp zigzag, and this one's going to be a sharp zigzag. Or if this one was an expanded flat, this one's likely to be an expanding flat, and this one's likely to be expanding flat. If this is a 1-2, 1-2, 1-2 structure unfolding, or a very bearish or very bullish push upwards, like very strong parabolic push upwards. So there could be a narrative for this developing right now, where all these corrections are becoming expanded flats for a super bullish 1-2, 1-2, 1-2 scenario. Internally, this falls in line with what we're expecting time-wise. When we pull up the correction for the prior correction, which I'm copying right now, the prior correction for the minor or the minor 2 was about this long. So that means we want the minor wave 4 correction to be either equal in time, almost equal in time, or just a little bit over equal in time. We want it to be somewhere around the same time of completion for the prior correction, the prior minor correction. So timing wise, it falls in line with what we're expecting. Structure wise, there's that fractal 5-wave move right there. That 1, 2, 3, 4, 5. Either for an A wave or a wave 1. Afterwards, we're going to expect to retrace for an A, B, C, either for a B or a wave 2. After this, we're going to get a push up either for a wave C or a wave 3, where we greatly expand beyond the zone. So this is why things are difficult right now, because we could still attack this high, then come back and attack these lows. Like that. Or we could attack this high, leave these lows protected, and just continue grinding up in bullish market structure. Or both of these extreme points are protected. This high is protected, this low is protected, and we continue to range internally. Then finally attack that high. So almost anything can happen at this point. It's really about managing expectations. If we fail to take this high, we start to come down, this is probably more likely. If we take out this high, now we basically are following two counts. Either the bullish 1-2, or we'll be following the expanded flats, where we pushed up for an A instead of a 1. So really, it's just about managing expectations, whether it comes to time, structure, and the levels and price that we expect to be hit, and how we expect them to be hit. Managing expectations is something I talk about a lot. And it really comes down to those three factors that I just discussed: structure, time, and levels and price. So just going back to pretty much our roadmap on the diagonal, this is something that we were observing. Structure-wise, we completed a 5-wave move and extended 5th with an ending diagonal for an impulse. Price level-wise, we hit our projected area for the terminus of an expansion, or when an expansion is likely to end. On top of that, price-wise, we were looking at these zones. Minimally, that 236. Ideally, that 3414. And then for an extreme case, that's 618. And then timing. So ever since this pivot ended right here, we've been once again looking at this correction either as a minute, which is right here, this minute degree, or a minor degree. Those have been our primary expectations. So minimally, we were looking for a minute correction, which was about at least 1 week. There was that 3-way move, right, for about 1 week. We were looking for it mainly to be at least 2 weeks to 3 weeks. This is our primary expectation. However, given the variations that I just went over, it's likely for price to expand beyond this. So we were on the right track. We wanted this to at least be a minute correction, which it very well could have been. Once again, this could have been completed as a minute correction. Or we're looking at this as a minor wave 4 correction. It's going to be at least a month, and well likely to be over a month. And that's the goal here. The goal is to either be within plus or minus 1 standard deviation of the count or the degree that you're observing. So you want to at least be right on the ball with either the degree that you're observing or +1 or -1 of it. So -1 of this would be a minuet. Right on time would be a minute, and then +1 would be this minor degree. This is how you manage expectations, just from structure, price, and time perspective, utilizing Elliott wave. So we'll continue to do that. I think after this week, we'll have a little bit more of a direction to follow. Once again, it honestly really kind of depends on taking out these levels right here internally. Once we take out these levels internally and how we take it out, will definitely signify the variation that we're following. And I'll continue to update you guys in Discord as well once we get more price action that's discernible for me to provide a more qualitative analysis for it. But as always, you're welcome to message me for updates, either publicly or privately. I'm always here for you guys. And I hope you guys enjoyed the stream. I hope you guys enjoy the holiday weekend. And if you need anything, reach out to me. But as always, hope you guys enjoyed it, and thanks for your time.